cautious optimism from manufacturers in Singapore as January's Purchasing Managers Index expanded for the seventh straight month. But economists say employees in the sector will have to wait and see before salaries can improve. The PMI rose by 0.2 point from December to 50.7 last month, boosted by an increase in new orders and exports. A reading above 50 points that the sector is posting growth. The electronics segment expanded for the sixth straight month in January, but growth slowed 0.2 points from a month ago to 51 points. It's a healthy reading, experts say, as they expect the demand for 5G solutions and cloud computing systems to hold up. But manufacturers continue to be concerned about a resurgence of COVID-19 infections, which could result in supply chain disruptions. One expert says the current output momentum is likely to sustain until June, but for the full year, growth will be slower than last year's.
This year, we do expect the manufacturing sector's growth will probably halve to around 3.5%, mainly because of the higher base last year. I think a lot of the good news has been front-loaded, meaning that a lot of the the disruptions to the global supply chain and the subsequent restocking rush is actually over.
Meantime, the manufacturing employment contracted for the 12th straight month in January, but it inched closer to expansionary points. Economists say it's a good sign for the labour market, although it might take some time before firms ramp up on hiring.
If you compare that to, for instance, the business survey or expectation survey for manufacturers, only a net 4% of manufacturers are planning to hire in the first quarter. So what that tells us is that probably employment prospects will still remain a bit tepid, at least in the first quarter of this year.